say to someone watching who's still a little bit leery when it comes to anything cryptocurrency or Bitcoin or Coinbase or any of these investments? And obviously the underlying technology has been a huge hit for mainstream investors. But what do you say to that doubter out there that maybe still doesn't understand exactly how this currency could be viable when it doesn't have, say, the Federal Reserve behind it, doesn't have a government behind it? Unless you're in El Salvador. I take that back. Go ahead.
In the words of Satoshi, if you don't get it at this point, I can't help you. We went from an obscure protocol that was called rat poison, that was called, collectibles, that was called a Ponzi scheme. It's for criminals, it's for shadowy coders, all the way to a nation state using it as a currency. Never in the history of your life or your parents' or your grandparents' life have they seen a new legal tender be created from scratch. So if you're still leery at this point, just stay out. Don't even buy it. Stay out and just watch us create an entire new money market without you. And then you'll have to explain to your kids why you let the biggest transfer in financial history happen and you did nothing.
Don't let that be you. And with that, what's happening in Crypto Cruise? Sean's coming back at you, another cryptocurrency video. Before we get started, go ahead and check us out at Bitcoin Bros 101. We got our social links and we have some ebooks and courses we created just for you. You can also join our premium Patreon pass. This is also pinned in the comment below. Getting straight to it, El Crypto Prof. Bitcoin is back above key support. Very, very important. Perfect trend line bounce, which has been in place since October of last year. Taking a look at this, let's look and see what's happened. The key supports he's referencing is here, and look what just happened. We came back down to this level and hit this upwards green support line. Now the question is, every time we see this, how high do we bounce? Okay, so the first time since back last year, we had a run up 85% to the upside. And then the last time we had the downtrend and retested level, how high do we go? Let's see, the high point, 91%, almost 92%. So you got 85% and almost 92%. So an average, let's meet in the middle, you're talking about roughly 88%. Let's just be conservative and use the low end, 85%. So Bitcoin goes up another 85% from right here. What would we anticipate? So let's take a look. 85% will take Bitcoin right up to that $100,000 threshold. So is the next run up going to be testing that $100,000 mark that everybody's been waiting on? Let's see how long this took to play out each time before. First time when it had bottomed out to when we seen that peak, that took roughly 92 days. So right here from when we seen this peak, that took roughly 51 days. So you got 3 months, almost 2 months. Could we see this happen faster than what people anticipate? Look here. Could we, if we wait another 51 days, what do we see? We see roughly June, and if we take another 90 days, this could take us all the way out to August of this year. So over the next few months, we're going to be seeing some type of massive move to the upside. One thing to note, the 20 and 200 moving averages, if we look how close they got before, right here, it wasn't that much gap. Right here, wasn't that much gap. So there's still more room to blast up to the upside. Hope you're paying attention. Crypto Prof is weighing in again on the total 3 altcoins. Are you on board? We're running into this falling wedge pattern in a bullish fashion and just respecting support and resistance levels. And right now, when you come into this in a bullish pattern, you trade downwards for a little bit and then you come out in this bullish fashion as well. So taking a look at where the technical target actually is for this, you come into this, trade sideways, and the way you measure this is you take from swing low of the candle body stick to the swing high of the candle body stick, and you can pull this up, and you can see this will go up to roughly $824 billion market capitalization for the total 3 altcoin market capitalization. Where this is, it's another 25-26% swing to the upside, so there could be some massive moves in the alts in the weeks and months to come. And looking at the overall total crypto market capitalization, you see that we've had this perfect back test and kiss. Let's zoom into this price action of this 20 moving average. We came down to this perfectly, and look at it's just a reset of the RSI, and we're going to have a continuation to the upside, and we're sort of consolidating below macro support, so we're going to see a massive move to the upside. You can look at this as a potential shoulder, head, another little micro shoulders as an inverse head and shoulders, or you can look at this as a huge cup pattern with the handle that's forming and then the blast off to the upside. Where the technical target's taking us up to is roughly almost that $10 trillion market capitalization at $9.8 trillion. So we hope that you're ready. Without further ado, let's hear the latest from Raoul and what he sees in this current market. Let's hear from Raoul.
So what's going on now? Why is crypto so shaky? It's the same reason tech's been shaky. It's liquidity, stupid. Remember, I've told everything about this everything codes, and those of you in Real Vision Pro Macro, and even Pro Crypto, Kevin Kelly and myself talked about it yesterday in Pro Crypto. Liquidity is the big driver of all asset classes, and particularly crypto. It's the most receptive to liquidity injections or withdrawals. So I correctly managed to time the bottom in 2022 based around the liquidity cycle. And the forward-looking elements of the liquidity cycle continue well into 2025. So I don't have anything to concern over. So therefore, we're looking at the wiggles in liquidity. The liquidity air pocket is happening. If you think about the US liquidity, it's driven by the Fed's balance sheet, which they've been doing QT, so they've been tightening it, making liquidity less available. But that's been offset by the Treasury, by the draining of the reverse repo. The reverse repo is an offset to what the QT was doing. And in the meantime, the other part of the equation is the Treasury General Account, which is the checkbook of the US government that Janet Yellen controls. She's been building that. But these have meant the liquidity based back in 2022, and it's been going vaguely higher. The everything code cycle taught you that there is no way of financing the debts. It's now become a word people use, fiscal dominance. This is the everything code cycle I started talking 2 years about. The everything code cycle says, well, if GDP growth is too slow, then the amount of debt in the system is too high. So you need either interest rates to come down or you need growth to go up. Now, growth is driven by demographics over time. There's not much we can do about that. You get cyclical growth, but you don't get the overall trend rate growth, which has been slowing. So the available GDP has to pay the interest on the debt. Between the government sector, that's 100% of GDP in debt, and the private sector is 120% in debt. So we've got not enough GDP to cover the interest payment. This gets really exacerbated when interest payments are high. Trend rate of GDP growth is about 1.75%, call it 2%, whilst interest payments right now are, let's say, 2-year bonds are 5%. And if you double that, taking into account the private sector, you've got 10% of interest payments and nominal GDP growing at whatever it is, 5. So there's not enough GDP, which is why the bond market's been freaking out. Over time, yields have risen, even though the Fed have been talking about cutting rates. And this is the issue of not having enough GDP growth. This is the everything code cycle. So what it leads to is what's known as more cowbell, which is stimulus. Stimulus can come in a number of ways. The most obvious way is reducing interest rates themselves. That has been a typical path. The other way is the backdoor mechanism of injecting liquidity into the system. Quantitative easing is the best known one. The other one is draining the reverse repo and also draining the Treasury General Account.
And there you have it from Raoul Paul. His prediction is what is coming is stimulus. Stimulus is going to cause this market to erupt to the upside. Will it happen right away? No, it's a lagging effect, but it will come. And with that, I'm Sean with the Bitcoin Bros. You guys like this content, go ahead and smash the like button. If you haven't subscribed to the channel, go ahead and show us some love. We appreciate the support. With that, that's all I have for you today. I'm out.